Welcome to episode 12 of Simplified Trading Strategies from Market Secrets. In this episode, we are going to learn about inside gap trading pattern. In the last three episodes, we have discussed about gaps on the direction of the trend. That is, the price movement and price gaps are in the same direction. It's like uptrend and gap up. In this episode, we are going to learn about inside gap trading strategy. There are two types of inside gaps. A price gaps up in a downtrend or a price gaps down in an uptrend. For our example in this episode, let's take price gapping up in a downtrend. There are three different parts which forms this pattern. A pre-downtrend, followed by a gap up, followed by a pullback. Let's talk about this in detail with an example. Here is an example for inside gap pattern setup. So if you look at here, the price is already in a downtrend. That is our first condition. The market should already be in a downtrend. The price should have dropped big the previous day. So the first condition is satisfied. Now the price should gap up. If you look at here, the price gaps up the next day well above the low and closing price of the previous day. So this is the low and this is the closing price of the previous day, and the price gaps up the next day well above those prices. Now comes the third condition, which is the pullback. This is the critical point of the strategy and it has two outcomes. The first one is if the stock gaps up and then sells off and then remains below the high of the day, then the stock has reached its high point and it will continue to slide downwards. So that's the first outcome. But in case if the stock gaps up and pulls back to the downside but then rallies to break above its opening price, then the up move is probably not a trap and the stock should make a new intraday highs. This is a no trade zone for us. So if the price gaps up and it goes down and it comes back and goes above the day's high, then it is a no trade zone for us. So when it comes to the importance of the volume, it is important to watch the volume carefully when determining if the gap is valid or not. If the stock gaps up and the volume is also high and the price remains above its opening price after the early morning pullback, then it is an excellent sign that the stock has further to go on the upside. Don't touch it, it's a no trade zone for us. So if the price has remained above the opening price after 30 to 45 minutes of market opening, then be very careful. But in case if the volume appears after the gap up and the stock immediately comes down under the selling pressure and the price remains below the high of the day, then the chances are that this volume was a seller. So how to take entry in this particular setup? So when it comes to the entry, you can enter into the trade if the price remains below its opening price 30 minutes after the market opens. Also, you should see whether there is any selling pressure. If you look at here, there are two very long wicks which indicates a market sell-off or a huge selling pressure, and the prices always remain below the first candle's high. So this indicates there is a huge selling pressure or there are huge sellers. So I can take an easy entry if the price remains below its day's high 30 minutes after the market opens. So this will be my entry. There's a small pullback to the upside and then followed by a big drop. So I can enter around here. And the stop loss for this strategy is very simple. You can use the high of the day as your stop loss. So you should place your stop loss just above the high of the day. And the target for this strategy should be calculated using the stop loss. We should target at least 2x of our stop loss. So calculate the distance between the entry price and the stop loss price, and 2x of that should be your target. This is how you should be trading the inside gap trading pattern. This is very different from the 3 gap trading patterns that we have discussed in the earlier sessions. If you have any queries on this particular setup, let me know in the comment section. I'll be happy to answer it. As always, try reading the price action behind these candle formations and gaps. That will give you amazing results. Hit the like button if you have liked this video and share it with your friends if you find it useful. Also subscribe to our YouTube channel and click the bell icon to get notified whenever we conduct live sessions. Thanks for watching. Have a great day. Goodbye.